All right, guys, Sam back with you here. It's Tuesday, December 11th here, and Tuesdays we're looking at traditional assets. And members asking for an update here on crude. Now, we had looked at this a couple of weeks ago and had done a pretty nice job of identifying that pivot here. This is just a remarkable technical reaction, just astonishing. So we got a couple of things to see here. Just a great example of where the Elliott principle just, you can't, like, how do you miss that? How do I get comments all the time. People say, "I see Elliott Wave's bullshit." Really? 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 I don't know. I don't know how you argue with that, right? So it's just as technically pristine and perfect as it possibly can be. Oh, now let's add a little algo to it. All right, about the length of the 3. All right. Where are we looking for the 4? Between 23 and 38. Yeah. This Elliott algo is bullshit. Well, what happens after that? Yeah, it's bullshit. Yeah, no, shit is bullshit. I mean, how do you argue with that? 5 down, 3 up, right to the 618, right to the golden zone. I always chuckle. Right? Please be on the other side of my trades. If you're telling me that that's bullshit, please take the other side. Right, I'll do that with you all day long. All right, guys, not to be smug about it, but just kind of, when staring you in the face, and I say, this Elliott Wave is bullshit. I just find that astonishing, right? So what else could we add here? This looks like a technical pivot. Let's see. Well, we got three pivots we could add here. Let's put that A on, that B, see if we can get a median line. Well, here's your gold here. Well, it's not golden, but here's your corner pocket, right? So we have 80% odds, and you can see this is met repeated. So first time, right? That's where we get it. That's the 80% realized. Bounce back, bounce back, bounce. Look at the lower parallel. Just support the market all the way up. Now, what's interesting here is that this move here, we fail to make the median line. So, right? So this is an additional tell because we don't get there from this tap of the outside parallel. Because we don't get there, sign of weakness. Right? That's it. So you'd be looking at that going, yeah, we're at the 618, but the median line's not there. So, you know, as to how you would go about the entry there, because you'd certainly have to be conscious of the fact that when this started, there was the real possibility, because this was kind of a short and shallow 5, and we had to work through an AB truncated C, or that's my count as I was counting it at the time, and you got a squirrely little 5 here. So it was very realistic. And note, I'm on a daily chart. It would have been very, very easy to think down and then one more push up, right? Because we had a very, let's see if I can open this up here for you. So you can see this looked like 1, 2, 3, 4 coming down. There would have been one more push, but we don't get it. So likely we finish with a diagonal in here, although it's 1, 2, yeah, boy, it's daily chart. It'd be harder to dig this out, but it looks like we finish with a diagonal. Right to golden zone, right? Just enough, right? So note here, right? So this futures 101 guys that go, oh man, that 618 is a good place to put your stop. Nope, look, I promise you, somebody got screwed here. Somebody who was short, their stop got filled right there. $26 lower. I promise you, somebody got stopped out right there. So, okay, let's go back here. Now, where are we now, right? That's what people are interested in. So we've had this clear, like 5 and 3. So what does that imply? So if that's a 5 and we've corrected it with this 3 right to the golden zone, well, we're now thinking 1, 2, 3, 4, 5, and you go, shit, man, is crude going to $16? Well, what's an alternate? Is there an alternate here? If this is 5 down and this is 3 that corrects it, what's our alternate? It's hard to find one. So it just implies lower prices for crude no matter how you slice that. Now we're off here into the summer of next year. Are we going that low? Well, shit, I remember when we were at $26, people saying there's absolutely no way we're going that low. You got to trade what you see, not what you think. It seems unreasonable. Well, we're hovering right here around $50, well, between 49 and change and 51. So we're hovering, right? So do a little fundamental research, and you'll hear a lot of talk about, well, that's, they can drill there and still make money. Maybe. Is that why we're pausing? Is it technical? Look here, right? Look at all these prior support zones here. We can drag this over. hesitating. Is that prior resistance offering support? Boy, as to whether or not we're going down here this low, boy, it does seem hard to imagine that. Yet that certainly is what the count is implying. So where's the next trade? Well, you got a doozy. So this straight rip down. Well, let's look at it this way. So we have this clearly identified. So we can pull some of this off since all of that is now pretty well established. So 1, 2, 3 sure looks like ABC. And then you think, well, could it be 1, 2, 3, 4? Well, that wouldn't make sense in the context of this very clear 5. So something completed down here. This looks like the correction. The fact that it's technical, all the more. So the next trade, as far as I'm concerned, is just screaming at you. Right? Eventually, when this pivot and we start to retrace this move, how do you not salivate for that? Yes, please fill me here. Yes, please. I'll take that one. Now, so here's the. Here's where you got to think about. Let's see if I want to be a seller in here in that range. So you got to like between 63. That's a big stop. So here's where the fact that if you're trading, so we're looking here at a CFD in crude. So if you've got a Forex account, which we encourage you to consider that, and we've been doing a lot of training on getting into the Forex market. So you can trade. You don't have to trade a futures contract there and maintain the margin if you're so because this is a home run ball. You're swinging for the fence there if you're going after the third there. So to hold that, very challenging if you're holding a futures contract. Right, not to mention the volatility, the ongoing risk. So maybe you could do it with a combination of an option trade. So I would personally never be short in the futures market without a hedge of some sort. There's just too many things could go wrong there. Just especially considering our current situation between, not to get political, but I would never be unhedged short in crude ever under any circumstances. So now if you're that's me talking about the futures contract. Now you could be in here with the CFD because you don't have to worry about that stop getting filled here. So you could enter in here. Well, I shouldn't say it's much lower probability that you'll have a trouble with that stop getting filled, but you could certainly get some gnarly slippage if you were short here with a stop and had something explosive happen. How about we say it that way? So there's certainly a trade setting up here within. So here's your kill zone here for this hot box. If we're going to get a 1, 2, if we're going to do this 3, 4, 5, right? Seems hard to imagine. Ethereum less than $1 seemed hard to imagine when it was $1,400. Crude at $26 seemed hard to imagine when it was at $120 or $112 per this. Shit happens, right? So first assumption always is you're wrong. So I would not be in that without some protection. But that said, in terms of the technical analysis, this is a slam dunk to sell that. Now, that doesn't mean you're guaranteed to make a shitload of money and that you couldn't get stopped out. I'm just saying in terms of a technical setup, if this comes up and we get 3 here, if we get 3, that's a must take. Now, how you take it, that's up to the individual, whether you have the expertise to do it with options or a spread or a combination. Are you going to do it in CFDs? A lot of different ways you could take that position. But if you're just looking at the technical picture here, given that the precision of that ABC and the fact that we've screamed off of that, just straight down, and I'm on a daily chart, straight down. That's, oh, please. Please, someone who thinks that Elliott Wave is bullshit and that this algo stuff is for losers, please take the other side of my trade there. Please. What's the risk reward on that? Let's split the difference. So stop on the 65. First algo target, there's almost 6 to 1. We get a full wave 3. All right, I know you're thinking, oh, come on. Crude at $22. What's that? What do we get there? 65 to 1. That's a home run ball. Now I'm not saying that I could stay in that long, right? That's a hell of a lot, and a lot of things could happen over that length of time. But there's the trade. That is the trade staring you in the face. One to watch, right? It's pretty. It doesn't take a rocket scientist to go, oh, straight move, likely going to be corrected. People who caught this, right, there'd be some correction. What else is there? If we're coming back up, well, we got to wick off a few things here, so that will be of interest, right? We're going to get through that. What else is up here? Well, we got a bunch of pivots here that would be worth wicking off here for potential. This actually looks promising right there, right at the 50. You've got a prior resistance zone up here. Right, so you got a little collection of material up here to support the idea that structurally you could have something there. Now, based on how long it takes, we don't know how long it takes to get there. Shit, could take 3 months, could take a year to get there. We don't know. All we know is that if it gets there, what's the other thing you're going to have there? That's going to tee it up. Maybe this all has to move over. Well, 1, 2, 3, right? Well, how long? Right? That's October of 19. That could take all of next year. No way to know. But that's the trade, right? I would hedge it, but I sure as hell would take it. So we'll see. So that's where that's the 50s up there at 62. We're sitting down here at 51 and $10, right? That could take months to get up there. We just don't know. But in terms of the technical analysis, oh my God, that's a must take. Right? Again, why would you not take that? Well, I'm worried about getting stopped out. Well, hedge it. There's a home run. That could be the trade of 2019, right? If it's not going to be the longs in crypto, how about the short and crude? All right, guys, not to dwell there, but that's pretty straightforward, right? That should be on your radar. All right, there you go. So keep in mind, you can always connect with us over on Twitter. Well, we try and engage with you there. I'm going to post, as we did yesterday, several people posted some charts on EOS. I think I have a mistake in mine, and we'll post an update on that. So I may try and get to that today. And right, you can always learn more about what we're doing over on our website, tradedevils.com. Appreciate you guys. All right, talk to you later.